A very good morning, guys. Yesterday, the market did something that looks like luck, and it's not actually. It settled at 24,399. The level every option desk has been defending all week was 24,400. We settled 1 point away from it, and then the day before one of the biggest results of the season, a single sector woke up and carried the entire market on its back while everything else was bleeding. But wake up this morning and picture has changed completely. Gift Nifty is trading at 24,230, down two-thirds of a percent, and a gap down below 24,400 and 24,300 as well. They spent all week defending and taking a support from. Crude is jumping, the world is turning risk off, and the calm we kept calling cheap is finally getting tested. This is not a quiet reset I expected. Tomorrow is still the real test. This is the Tanmay Edge. Good morning, guys. It is Wednesday, 8th of July. One sector held the market up yesterday overnight, and crude and geopolitics stole the story back. So let's go. So the official close for yesterday was Nifty closed at 24,399, down 31 points, about a tenth of a percent. That snapped a 4-day green run, and it snapped gently. The day traded in a band of just 182 points. The high was 24,530, so it reached up and touched the 24,500 resistance ceiling, got rejected, and drifted back down to settle almost exactly on 24,400 before and last 30-minute VWAP sell-off that happened towards that 350 level. So here is the part worth sitting with. All the week, the option chain said 24,400 was the support. The sellers of the puts would defend it, and 24,500 was the resistance. So we closed 1 point off 24,400. The map did not miss. That is yesterday's map graded, and I will give you the honest number once. On 8 calls we made, 6 landed, 6 out of 8. Sensex told the same story, guys. 78,180, down 104 points. A quiet pinned a day that happened. Now the strange part, only 19 of the 15 names went up. On a day the index barely moved, IT rose 2.43% and it rose alone. HCL Tech up 3%, Tech Mahindra up 2.86%, Infosys up 2.81%, and the TCS itself up 1.86%. That is the whole green column basically. Everything else leaned red. Realty was down 1.58%, metals down 1%, Pharma down 0.73%, Reliance, L&T, every name on the block, heavyweights were down more than a percent. The index only fell a fraction of a percent because IT physically held it up. Take IT out of it yesterday and this is clearly a red day. And the timing is the point. IT had faded for 3 straight sessions coming in. TCS reports tomorrow come in for the quarter. So the day before the biggest IT result of the quarter, the money rushed back into IT. That is not a coincidence. That is positioning and a bounce happening from the lows of IT index. Somebody is placing a bet before the number cracks in. So who moved and how? So the pro desk first, because they move first. Into Tuesday's expiry, the pros had dropped their protection. Yesterday, they did the opposite by closing. They cut their index futures position almost to flat, down to net long of just 5,435 contracts, and they bought back insurance, adding put protection to net long 45,315 puts. Read that together. The fast money stepped off the gas and puts its seatbelt on the night before tomorrow's event. That is a caution, guys, and that is a quiet caution that's happening. The foreign desks, they are still deeply net short the index, sitting at minus 2,38,838 contracts. But look at the pace. Their shorts went from 2,60,000 to 256 to 250 to 241 and now 238. The covering has almost stopped. and underneath that is in single stock futures they are net long 6 lakh contracts, and they added to it again yesterday. So long the shares, short the index against them. That is a hedged long book, not a bearish call. And on the cash side, official numbers, FII has bought 468 crore of stock yesterday, still a buyer. The crowd or the retail clients at the last. Clients are net long 1,64,000 index futures and still short 5 lakh puts. So that number has barely moved. The retail is still fully leaned into a range holding and the market's rallying, which means if the support even cracks, that is an exactly the pile of fuel that lights up. So putting it in one line, the pros are cautious, the foreigners stopped covering, and the retail did not blink and maintained their long stance. Because yesterday was expiry, we have a fresh map for the next week. The center of gravity has shifted to 24,400, right where we settled. Overhead, we have 24,500, which is the resistance, and it is heavy one. Traders piled on 51 lakh fresh calls there yesterday, the single biggest built up anywhere on the board. Below us, 24,300 and 24,200 are the two support levels, each holding about 28 lakh puts that have been written over there. The gear changes is about 24,400 level. Moves get dampened and the market tends to pin. That is your gamma flip level. Below it, moves speed up and pull towards that 24,300 to 200 happens extremely fast. We are sitting right on the switch. The options are pricing a swing of around 270 points for the week. That is where the straddle is trading. So roughly between 24,125 and 24,670 is what the market is pricing. And near week volatility is still cheap, almost under 10, below the week behind it. The calm has not broken in, but today it can change completely. But none of the map was built for what walked in overnight. Crude is up sharply, Brent back to $76, up about 2.5% as geopolitical tensions push back into the option chain. New York closed soft, Nasdaq off more than 1%, and Asia opened lower. Korea down hard, though Japan is only mildly red and Hong Kong is actually green, so Asia is off its worst. So Gift Nifty is pointing us to an open towards 24,230, below that 24,400 gear change, and just under the 24,300 support shelf we just talked. So with 24,200 sitting right beneath it, in other words, the market may open the day already testing the levels that change its character. A jumpy crude and a nervous globe are not the backdrop you want going into a double event. That matters for how you carry the risk today. So everything today points at tomorrow. Thursday is a double event in one session. It is Sensex weekly expiry and TCS starts the result season. That is why yesterday's IT move mattered so much. The entire rush into IT was a bet placed before the numbers start coming in. If TCS delivers, the bet pays and the IT pack can extend. If it disappoints, that same crowd unwinds fast and it drags. Wednesday, today, is the day you set your positions, not the day you swing it. So the plan and POV for today is simple, guys. We are opening below 24,300. So throughout yesterday's tide box, today's range is wider, roughly around 24,125 to 24,500. And if the selling has legs, do not rule out a stretch down to 24,000 as well. This is a day you trade the edges, not the middle part. So on a push into 24,400 to 500, that might happen by close. Sell the rise and do not wait for the round numbers, and that is where everyone else is resting their orders. Offer a touch under it, around 24,475 to 24,485, and you are filled before the crowd. On a flush down or the market coming down, 24,125 is your buy zone. So 24,125 to 24,200, buy it, because the whole market is stacked on 24,000 and you want to be ahead of them, and the stop loss should be 24,000. The middle 24,200 to 300 is no man's land. That is where you will get chopped up. So try to mean revert your play between that range. So do not build a heavy directional position into tomorrow's double event. That is the mistake. The pros just told you not to make by stepping aside themselves, and let IT lead you. Also, the VWAP currently stands at 24,185. So roughly around that 24,200 range is what we are expecting the mean to be present for this week. So we run the RupeeCase book on the same discipline, no chasing, next rebalance early August, and you can track it live on rupeecase.com as well. That's your edge for today, guys. If this added value, share it with one trader friend who needs it right now. Subscribe to Apple Podcasts, Spotify, or stream it live on rupeecase.com. I am building RupeeCase, India's systematic investing terminal. Link is present in the show notes. You just got earlier, guys. See you all tomorrow once again on Sensex expiry.